Imagine getting paid to buy a business that's already cash flowing. That's exactly what the SBA loan does. So in this video, we're going to talk about how to get an SBA loan to buy a business. Now, there are a lot of nuances with the SBA loan. So yes, we are going to cover what is an SBA loan. We're going to talk about the different types of loans that you can get. We're going to talk about what you need to do to qualify as well. And if you stay to the end, then I'm going to tell you exactly how I was able to get not only an SBA loan to buy a business, but it paid for 100% of the business and put quite a bit of money in my pocket. And this is something that is very common with the SBA loan. So we're going to talk about exactly how you can do that as well. So let's start off with what is an SBA loan. So the SBA is the Small Business Administration. Now, this is an organization that is meant to really help small businesses get that foundational education and really get the wheels greased so that they can be successful in the future. The SBA offers all kinds of things from education to workshops to grants and what we're going to talk about today, which is loans. Now, with most businesses, if we have enough history, if we have financials, if we have a good track record, then we can go out to almost any institution and get a business loan. However, with small businesses, specifically in that startup phase, we don't really have a resume, right? So what the SBA allows us to do as small business owners is get access to funding that would otherwise be fairly difficult to get. With us not having a track record of success yet because we're still young, these loans to these types of businesses are considered to be more risky. And so therefore, even if the SBA is coming out and saying, hey, look, we're going to help you out, they consider it more risk. So we have to be able to qualify. So what we first have to understand is that the SBA is an organization that basically helps small businesses get funding, right? But the funding typically comes from an actual bank. So imagine Bank of America, Chase, Wells Fargo, doesn't matter who, the bank is the one who's giving the loan, but the SBA is the one telling the bank, hey, look, we underwrote these people. They followed our processes. So we're going to help you out, Mr. or Mrs. Bank, right? We're going to give you some extra money and we're going to help secure this thing. So all in all, that entire package becomes the SBA loan. It's funded from a traditional bank, but it's backed by the SBA. So that's the typical way that it's organized. Now, for the SBA, you have to actually qualify. You have to be considered what is a small business. Now, right now, currently in our environment, a small business is described as 500 employees or less. It really kind of depends on your industry, but that's the typical kind of mile marker. If you have less than 500 employees, you're considered small business. The other thing is, you also have to demonstrate the actual need for the financing. If you could go out and whether let's say you're a small business, but you have a whole bunch of equity, you have a bunch of liquidity, and you don't really need the loan, well, then you could pretty much go and write your check anywhere at any bank because they can collateralize a lot of the assets or the capital that you have, and you're kind of good to go, right? So the SBA is really meant for those who are in one of those situations where they can't really qualify for a traditional loan. The SBA is also going to say, you know what, we want the owner to have some reasonable equity contribution, basically saying, hey, you got to have some skin in the game. The SBA lender isn't trying to say, we'll give you all the money and you put nothing into this. Now, at the end of this video, I'm going to show you exactly how you can qualify for 100% financing plus some additional working capital at closing. All right. It's not uncommon, but there's some nuances, and we'll talk about that here in a bit. Now, those are the overarching kind of themes, and we are going to talk about how to actually apply. But when we think about that consideration, right, depends on your industry. Are you considered small business in your industry? Depends on your need for the financing. Well, the SBA also provides different types of loans. There's several different loan products that the SBA provides. Now, these loans have different names and different rules. So for example, one of the SBA loans is the 7A. Now, this is common for working capital, operation capital, and things of that nature. So just imagine you're out there running a business, you have everything up and running, but you need to maybe hire more employees or purchase more product. And so really all you need is working capital. You just need some more cash. Okay, well, the SBA offers those types of loans, the 7A. Now, let's say we're buying a building that includes some real estate. All right, great. Well, the SBA has a 504 loan. So yes, we are able to go out and not only purchase a business, but if that business comes with some real estate, we can purchase the real estate as well. So again, there's a ton of different options out there. And now it's important for us as the entrepreneur, we have to know what are we trying to do before we apply, because depending on the loan, the application process is going to be a little bit different. Now, many entrepreneurs, you guys know, if you guys follow me, bookkeeping, I say this and I will continue to say this until I'm blue in the face. This is the hill that I will die on. Bookkeeping is so instrumental in a company understanding its financial position and gaining access to additional capital in the future, being able to make smart decisions in the future, being able to sell in the future. Bookkeeping is so important. And in a situation like this, if you were to walk into the SBA loan application process and your finances are not in order, your financial statement is not in order, or your ability to project a financial statement because maybe it's a new business, you don't have an existing one. If you can't do that, your ability to get through this loan process is going to be hindered drastically. You may not even be able to qualify. And even if you do, it might be drug out much longer than it already is. Now, all of these things that we just talked about, your business plan, your financial statements, and there's several other documents, all of those things have to be submitted and approved prior to even knowing if they will allow you to apply for the SBA loan. So when people are saying, oh, well, hey, I started the application, look, we have no idea if they're even willing to entertain the thought of lending us money until they review all of that stuff first. Then the actual application process starts. And if you drag your feet on that process right there, that could take 5 business days. It could take 10 business days. And as we start to look at the weeks, that goes by really fast, right? So it could be 2 or 3 weeks before you even know if they'll even entertain the option of lending you the money. So understanding that that application process truly relies on your ability to get the documents, now you can understand the effort that's going to be needed in order to go through this process. So now the next question typically comes into play. Well, all right, well, how long does it take for me to get approved through the SBA loan process? So we just talked about what it takes to get that initial underwriting even going. And on average, what they'll say is 60 to 90 days, depending on the complexity of the application and the complexity of your situation. I would lean towards the latter of the 90 days, but 60 days could be okay, right? So after they review your financial statement, your personal and business, your credit history, all of that good stuff, your business plan, then they open up and they say, okay, now let's look at the actual business you are acquiring. All right. So now they require a bunch of different details from there. Then they start that underwriting process as they go through the approval piece. Your actual loan commitment, full approval, doesn't actually happen until much later. And once that happens, then you get moved over to credit, and then you move over to closing, right? So the 90-day process is pretty on par with what you could expect. Now, again, this depends on the industry. This also depends, like I mentioned, on your complexity. If it's just one entity, let's just say it's an LLC or an S Corp that is purchasing the company, that is going to be a lot cleaner than if you said, hey, look, I have my one operating company here, but this operating company is held by an entity in Wyoming for asset protection. Well, now 2 entities are being underwritten, right? Now let's say, hey, this entity that I have here is buying it, but I also own these other entities that have nothing to do with it. But my personal financial situation is not strong enough to back this whole loan. Well, guess what? They need to underwrite the other entities that have nothing to do with this as well. So again, depending on the complexity of your situation, this process can take much longer. Maybe you have high interest debt with another bank. Well, maybe we can consolidate it, really reduce that interest payment, and go from there. Now, speaking of interest rates, another common question is, well, what is the average interest rate for an SBA loan? Now, understand SBA is considered higher risk. Why? Because we don't have the track record, the history of success in business. So typically what we're going to see is a higher interest rate. Right? This can be anything like prime plus 1.75 or 2 basis points or something to that nature, right? So roughly at the time that I am recording this video, it's roughly around 9.5 to 10%. Now, if you guys remember when we talked about the, how do the interest rates work and all that good stuff, we got a whole video on that. You guys can go and watch that. But essentially, this is not going to be cheap money. It's going to have some loans and some fees associated with getting the loan. But all of that is normal in the financing world. And it makes sense because this is technically a higher risk loan. But if we can get money for very little money out of pocket, sometimes it makes sense. Which leads us to the conversation of, well, how much money does the SBA loan actually give out? Well, if you actually look at the guidelines, the loan limits are up to $5 million for certain loan products, right? But When we think about this, what they're willing to do is they're willing to give us 90% loan to value. So if we go out and we purchase $1 million company, they're willing to give us a loan for $900,000. Think about that. If we went out to go buy real estate or something else, we would need 20% down for a lot of these investment properties. But we're able to get an entire business plus the real estate with it, plus additional working capital for only 90% down of the total amount. Crazy. But here it gets even crazier. They will often allow for the seller of the building or the business or the whatever to do a seller financing piece of the 10% that you owe. So let's use that same $1 million example. If the SBA gave us 900,000, which is 90%, there's 10% left, right? 100,000 left. Well, the SBA might say the seller can finance half of that. So now $50,000, we're able to seller finance. All right. So we don't have to bring that money to the table. So now out of this entire $1 million purchase that came with the assets of the business itself, it came with the real estate and with working capital, I only need to bring $50,000 to the table or 5% down. This is why the SBA loan gets, really sexy and really powerful as you scale and you acquire. Now, I promise to tell you guys the real secret sauce. How can we get the SBA to not only do 90%, but how can we get them to do 100% of the financing? So same thing applies, working capital, real estate, and the business. The SBA will allow you to go up to a maximum of 100% if it's considered an expansion loan. What that means is that you have been in the industry for more than 2 years, and the business that you're acquiring has the same NAICS code as what you are currently operating under. So if you have, let's just say it's a dog grooming business, it has the NAICS code and it matches what you're about to purchase, and you've been operating for 2 years, they will do an expansion loan and give you 100% financing. This is how I was able to purchase another firm for 100% financing, not only the business, but the building and some additional working capital. So you can see how powerful this can really be. Now, with that being said, let's make sure everybody understands the higher the loan with higher interest means the higher the payment, which means, yes, there's going to be more revenue that's required. There's going to be more scrutiny and things of that nature. But I mean, if everything else is lined up and you can operate accordingly, this is a powerful expansion tool for you to grow your business through acquisition instead of through marketing, right? Think about how powerful that can be. If you guys like this video, then we're going to make another video about the application process itself so you guys can really understand what's happening there. And if you guys like this type of content, then please put it in the comments below so we can make more content like this.